What did every market that is now trending need? Well, it needed a breakout. And it's true. Many times the breakout that you're about to trade is going to fail. So I want to talk about, is there a way that you can predict that the potential of this breakout that's about to happen could actually lead to a successful trading position? And straight up, nothing's guaranteed in trading. We all know that. But we can see certain things in price that points to a higher probability that trading the breakout that's about to happen can actually lead to profit. So yes, we can see something. And all it takes is for some understanding of the context that you're finding yourself in. So let's talk about a breakout. Now, breakouts usually come from a range, unless we're talking about a retraced price action, taking out the highs and lows as it continues on its way. But what happens inside the range is what we can monitor to predict if that breakout has a chance of success. So what do we want to see? We want to see smaller rejections off the highs or lows, depending on which way it's going to break. Price basing, which means ranging under resistance or above support. And we can also look for a certain gap that happens in price. So we're going to take a look at each of these. And then I want you to be able to dive right into your own charts and start testing it out, because like I always say in virtually every single video, don't take everything at face value. Start testing it out for yourself. So good breakouts starting with smaller price rejections. Well, traders tend to buy things that they feel are going up in price in the near future. Of course, selling is expecting lower prices. So what does that look like on a chart? So here, as soon as price stops making higher highs in an uptrend, I actually look for the beginning of a trading range. And trading ranges will eventually resolve into a breakout. Now, price may fail at the breakout level many times before finally moving on. Price may break out of the range and then pull back into the range. Now, this does not automatically invalidate the breakout. And price may break out and range just above the level. And ultimately, there's other ones, such as just plain old failure of the breakout and goes the other way, which would still be a breakout on the opposite side of the range. So as you know, when a market's moving up, we see higher highs and higher lows. In a range, we want to see price making higher lows in an uptrend, for example, as the rejections off of resistance gets weaker. Now on this chart, you can see the percent change in each downswing prior to the break of resistance. And then price eventually did break out and went up about 1.5%. So what's happening when this happens is, even though prices are not going higher, buyers are still stepping in at higher prices. So keeping in mind, this is a silver against the US dollars. So we also have to consider that the higher lows are plotting because less selling is also happening. But either way, there's an edge to a bullish move here and a higher probability of a breakout actually succeeding to gain some upside traction. Now, what about price ranging under resistance or above support? So go back to a consolidated market. We can also see price reach the top of the range or the bottom, depending, and just sit there. And barring any sort of price spring or an up thrust, this is another sign of predicting a successful breakout. So what I like about the basing is that when I see a spring, which is just a poke below the bottom of the base and a quick buy up, that for me, that's a great entry point, as the probability is leaning to a breakout that will have traction. But even if it does break out and it fails, you're actually in the move early enough that can allow you some type of trade management depending on your strategy. And you may have to drop down to a lower time frame to really see the details of that base. But for simplicity, I use the daily for the setups, and sometimes I will use the 4-hour chart for the entry. Breakaway gaps. Now, I covered gaps previously in another video. And unlike the other ways of predicting a successful breakout, this gap is going to happen after multiple tests of support or resistance in a range. And with the gap, price has already left the range and it never looks back. Now, this gap is not filled, which means your breakout is a success. And you would use your tools and your trading tactics, whatever they are, to take part in that next move. So if we can predict what could be a successful breakout? Is there something we don't want to see? Yeah. Now, anything can happen in trading, okay? But there are some things that I personally look for to discount trading a breakout, or at least manage to trade a bit more aggressively than I would. And the main one for me is a sudden spike in price from the low of a consolidation to the breakout. Now this is not the best example, but it's pretty close. You can see that price pretty much rockets from the bottom of the range and it breaks out. There was no entry in this particular time frame because before that momentum candlestick plotted, there was nothing to trade off of. I would not look for a trade entry when price pauses. Why? Well, I predict from this move that price will probably retrace because traders that got in at the bottom, they became profitable pretty quick. Any pause in price is probably going to cause them to want to cash in those profits. So as you can see, price does pull back into what was once previous resistance. Now it's acting as support. So what's the next play? Well, a pullback after a breakout. Trade the pullback. And this is where a trader may want to consider an entry. So wrapping this up, it's quite simple. We're looking for signs that the breakout could be successful. And these 3 ways we just talked about, they can help you predict which breakouts could pay off. Again, anything can happen in trading. And all we're looking to do is just tip the odds, give ourselves a little edge to make some money. So don't just look at the bars on your charts, but try to really understand why something is happening. For example, why is price not rejecting far from a support or resistance zone in a range? What does that mean? What does the basing mean? What does it mean when price pokes below a level and then springs back up during the basing in an uptrend? If you can answer those questions, it can help you decide which breakouts or potential breakouts are worth considering. If you like this video, please give it a like. Any questions or comments, pop them in the comment section below, and I'll answer them. Thanks for watching.